The trillion-dollar companies are coming to crypto. Hey guys, welcome back. Now, I've said it before and I'll say it again, the big money that's really going to move the crypto prices to new all-time highs is not going to come from the small investors. It's going to come from the big institutional capital. And for this reason, I'm always keeping my ear out for anything to do with institutional adoption. And the good news is that there's been some great developments recently. Now, there are four mega whales from the traditional financial world. We have Fidelity with over $4 trillion of assets under management. We have Vanguard with 7.2 trillion, Charles Schwab with 7.5 trillion, and number one is BlackRock with a whopping $9.5 trillion of assets under management. Well, just last week we got some great news. BlackRock, the biggest whale of them all, will soon begin offering crypto services to their customers. So this is obviously epic news and just says to me that mass adoption has not even started yet. Now, for the remainder of this video, we're going to focus on another of these investing titans, and that is Fidelity. Now, for the last couple of years, Michael Saylor has been putting on a Bitcoin for Corporations event, and they just recently interviewed the head of sales and marketing for Fidelity, and there was a lot of positive news. So in this video, we'll be looking at Fidelity's crypto story, and it was very interesting how they got started. Then the latest crypto developments from Fidelity. Then find out which coins and tokens their institutional clients are asking for the most. And then we'll finish up with future insights of what's coming down the road for Fidelity and crypto. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, so one of the mega investing titans from the traditional financial world is Fidelity, with over $4 trillion of assets. But what you may not know is that they've actually got a very interesting backstory of how they got involved with crypto. Ready? Let's do this.
You know, it's a great story. It's something that, we enjoy telling because it really resonates with clients. And it's something that, quite frankly, before joining the firm, I wasn't aware of it myself. So yeah, we're known definitely as an early mover in the crypto space, but those roots kind of go back to 1999, where Fidelity took the bold step of funding the Fidelity Center for Applied Technologies, which is where we study lots of different base level technologies. So whether it's AI or virtual reality, we began to study distributed ledger technology in a complete way, where we started mining cryptocurrency in 2014. So as part of our exploration of that foundational level technology, we started to mine cryptocurrency. And in mining cryptocurrency, we accumulated Bitcoin. We accumulated Bitcoin in 2014, looked at the ecosystem and said, wow, there's really no one that looks like us. Or, there were really, there were good retail on-ramps, but there was no one focusing on mitigating the gaps or concerns that institutions faced in the space. And then continue to explore the space. And then realized that we could actually potentially have a commercial business and a viable commercial business in this space, and thought, should we pursue retail or institutional? And to that nod, knowing that there were viable retail on-ramps, we chose the institutional path. And so while we're a Bitcoin first company, we fundamentally believe that we're building infrastructure to support the next several decades of innovation in financial services and beyond.
So they began studying distributed ledger technology and actually mining Bitcoin way back in 2014, right in there with the early adopters. And this was way back when you could buy Bitcoin for only $100. If only we could wind back the time, right? I actually remember a Google ad for when Ethereum was first getting added to Coinbase. I remember thinking to myself, shall I take a look? Nah. Anyway, at the time, there were already companies helping out smaller retail investors, but no one was really focusing on the institutions. So that is what they decided to focus on initially. So, next up, what's been the biggest changes and developments over the last couple of years from Fidelity's point of view?
Yeah, so I think we saw significant changes. I mean, obviously, those changes began in 2020, and one of the things that we do that really helps to ground us and reinforces kind of what we see from a boots on the ground perspective, from a sales perspective, and interacting with clients is every year we have a digital asset investor survey. So we query hundreds, if not thousands, of digital asset investors as to their sentiment around digital assets. And it gives us the ability to look at trends in the space that are really specific. And look, I think it's very clear that we saw significant institutional adoption, but what we wanted to do was dig down and say, where were those really strong pockets of digital asset, that institutional digital asset adoption? And we did find significant strength in family office, registered investment advisor, and really emerging adoption on the corporate side and on the pension side. And so that gives us the ability to be focused in terms of deploying our resources based on client demand. We did see a growth across all segments. We also have a tremendous amount of clients that still have foundational level questions about the broader ecosystem, Bitcoin's role in a portfolio, and digital assets in general. And this is why we took particular steps to build out a research team that was focused on creating institutional grade research that was definitely balanced and sought to really reach a diverse institutional customer base. And so our most recent research reports have gotten a lot of press and a lot of great client attention. Getting off zero is a foundational level piece that explores kind of how to get started in the space. And, while I think that we've seen tremendous growth in terms of the institutional adoption, if you think you've missed it, you haven't. There's still a fairly long tail of folks that are just beginning to get started in this space. We take for granted that everybody knows what a blockchain is, and everybody knows kind of what Bitcoin's role kind of within the global macro picture is. That may not be the case. So we do have many clients that are beginning to kind of explore the narrative around digital gold or Bitcoin's role in a diversified portfolio or as part of a balance sheet.
So if you think you've missed it, you haven't. There's still a long line of folks just getting started in the space. And even right now, they've got many clients asking about Bitcoin's role as part of a diversified portfolio and also how to add it to their corporate balance sheet. And she mentioned Fidelity keeps creating institutional grade research like this one, which shows based on supply and demand how Bitcoin gets to $1 million per coin and beyond. Bullish. Always nice to hear super high price predictions, especially when they come from the highest quality, most reputable sources. Okay, next up. Any good business will put the needs of their clients or customers first. So what are the coins and tokens that institutions and corporations are most asking for right now? Take a look.
So we definitely are a Bitcoin first organization. And the reason we're a Bitcoin first organization is the fact that we're focused on the traditional space. So traditional financial institutions, traditional institutions, that was primarily kind of the directive that we were hearing. So most of our clients were specifically asking about Bitcoin. So if it's 90% of what you hear, you're going to dig deep on that subject. But it's also really, if you're exploring a brand new space, like a brand new asset class, it makes sense to kind of dig deep on a specific asset. So I would say we are definitely a Bitcoin first organization, but we are not exclusively a Bitcoin organization. The vast majority of our clients still primarily ask about Bitcoin, but we are seeing an increasing demand for additional assets. So I think the beauty of that is clients initially become interested in digital assets, ask about Bitcoin, develop a base of knowledge, and then quickly move on into other assets. I would say corporations are primarily focused on Bitcoin, given that reserve asset status. But when we think about adding assets to the platform, and we do intend to add more assets to our platform, we've been public about adding Ethereum, at least in the near term. We think about it, the lens that we look at is clearly client demand. Is there client demand for those assets? Potentially, what's the technical feasibility of us adding those assets to the platform? And then finally, what's the regulatory construct? And we do know that Bitcoin and Ethereum have some degree of regulatory certainty, and that in itself is a factor to ourselves and our clients. But we also have had a handful of clients, even corporate clients, if they have customer-facing business or consumer-facing businesses, ask about other assets as part of a merchant services platform. We don't offer services like that. We've been asked for support for Dogecoin and things like that, but we don't intend to offer that in the future.
So as of right now, it is Bitcoin first, which does make sense as Bitcoin really has crafted its own place in crypto without any serious competitor. It seemed to have claimed the digital reserve asset, which is very appealing to institutions. And then great news for Ethereum fans. Although they've been saying that they're going to add Ethereum to their platform for quite a while, it looks like it's going to be added anytime soon. And then also bad news for Dogecoin, as although clients have been requesting it, it looks like they won't be adding Dogecoin anytime soon. Okay, to finish up, what about future developments? What is coming in the near term from Fidelity?
Look, I think given the appetite for our clients, a couple of the things that we saw out of the digital asset survey, and we always kind of go back to that survey because it really grounds our assumptions in practical thought. By 2026, our survey respondents, 90% of survey respondents expected to have Bitcoin in a portfolio. That in itself is mainstream. So we're marching towards that 2026 goal where we believe this will be a mainstream asset. If that's a mainstream asset, then we need lots of different types of either exposure vehicles or ways in which the clients can interact in ways that are useful to them. So expect from us that you'll see additional product development on the asset management side, given the fact that, look, it is potentially challenging for traditional investors to hold spot Bitcoin in portfolios. So I would expect that, yes, we're an ETP hopeful in the US. We will be launching additional products in other jurisdictions, and we'll continue to innovate on the asset management side because of those exposure products are critical to the more mainstream adoption of digital assets in general. But we'll continue on the spot side as well, because there's real value in holding the physical asset as well.
Fidelity is one of the top 4 investing titans that carry trillions of dollars of assets under management. It looks like they still only offer Bitcoin to their clients, but it also looks like Ethereum will be added anytime soon. One of the key parts to their business is measuring market sentiment, and they send out thousands of surveys every year to their clients. And amazingly, they said 90% will have some form of crypto exposure in their portfolio within the next 5 years. They say we are still really early and that they've got a long line of clients only now starting to acquire about how digital assets can become part of a diversified portfolio. They said it's still really challenging for people to own Bitcoin or crypto through an ETF, and they're really pushing for theirs for the US and international. And then just last week, we had the biggest whale of them all, BlackRock, saying they're getting into the crypto space very soon. So there you are, guys. Hope you enjoyed. We now have these trillion-dollar companies trying to get crypto products out to the masses. And I think although things seem a bit uncertain and fearful right now, I do think the next 1 to 2 years are looking exceptionally good for crypto. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.